When markets are declining and you look at your statement, you see it's gone down, do you have the courage to stay a long-term investor or make some changes? To me, I've got one chart that shows you why I stay invested for the long term. That and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. More and more recently, I've had people reaching out saying, I feel like I need to make some changes to my investments. And I get it. Emotionally, you take a look at your statement and you see it decline once and you say, okay, well, I know that happens. You look the next month and it declines again and say, oh, geez, is there a problem? The next month, maybe things stabilize or they go up a little bit and you say, okay, it's over. And then you get the next month's statement and it's down again. And the next month, and it's down again, and it starts adding up, and you start thinking, oh my goodness, investments are only going down. They've only gone down for essentially 6 months. They're going to keep going down. I need to make some changes. I can't make money doing this. I'm just losing money. Guys, we haven't had a prolonged downturn in the stock market since, gosh, I wouldn't even argue 2018. I might need to go back to 2015, 2016. Back in that time, guys, that's a long time. That's 7 years since we've had several months in a row where the market hasn't rebounded, hasn't come back, hasn't been pushing back to new highs. We obviously went through the COVID pandemic, the crisis, and but that's more of an anomaly, guys. That was the sharpest decline, the sharpest and quickest recession ever, followed by the best 50 days in the stock market ever, and some of the best 100 days, I think, in 100 years, okay? So that's more of an anomaly. We've had a stretch here. January was terrible, February was terrible, March was okay, April was awful, May stabilized, June was terrible, followed by, thank goodness, July being a better month. So guys, it's starting to wear on people that, wait a second, for a long time now, it just feels like my investments are going down. Should I be making changes? I can't make money in the markets when the investments do nothing but go down. So you got to take a deep breath and have that inner resolve to say, no, I'm going to stick this out for the long term. And how do you do that, especially when all you see again is, you look at your statement, markets are going down, your investments are going down. In one chart, this is why I continue to stay invested. This is a chart of the total return of the S&P 500, just U.S. large cap stocks, going back 20 years. Gosh, hard to imagine 2002 was 20 years ago. I am old. Hopefully you don't relate. But also comparing that above is the cumulative impact of inflation on the value of a dollar over the same 20-year time period. Take a look at that. Your dollar, your purchasing power has eroded nearly 40% in those 20 years. Things have gotten that much more expensive over this 20 years. Meanwhile, your stock investments, the S&P 500, is up over 600% in those same 20 years. And you might say, well, you know, the market's been great. Let's think again here. 2008, the great financial crisis, was the worst stock market since the Great Depression. Worst stock market since the Great Depression. We've had tremendous political divide. We've had, over this time period, we've had Europe as an economy. The euro almost failed, right? And they're still trying to hash things out. And of course, we shut the pandemic down, or we shut the economy down during the pandemic, the first pandemic since in 100 years, right? So yes, there's been unprecedented financial stimulus and an intervention by the Federal Reserve. But guys, this has been no cakewalk. And you're feeling that cakewalk right now, or that lack of a cakewalk right now over the past 6 months, where the stock market has had a lot of volatility and a lot of negativity. So here's the crux of the issue. With the income that you're making, or when you receive dollars, you can spend it, of course, but any dollars that you don't spend or choose to save up for your future, you've got a choice with those dollars. Well, do I keep them in cash, really, really safe, or do I do something else with it? Do I invest them. And you've got a smattering of choices. You can invest in real estate. You can invest in Bitcoin, right? You can invest in bonds, which are a little bit safer. You can invest in international investments. Or you can invest in stocks, okay? The stock market. And for many people, to help manage risk and diversify some of that risk away, you might use a smattering, a mix, an allocation of all of those and more. But at a fundamental level, you can keep that money in cash, nice and safe and steady, or you can invest it. You can do something else with it. You can invest it. Well, right now, we all feel that inflation is real, but trust me, rest assured, we're going to go back to a time at some point in the future where you're not going to feel inflation. And you might even, maybe your kids will say this at some point, inflation's not real. It doesn't even exist. Prices pretty much stay the same. There's no eroding of my purchasing power. It stays the same. It's no big deal. But just like a frog sitting in a pot on a stove, slowly turning up the heat ever so, that frog will sit there just waiting, not really feeling the 1 degree slight minor increase in water temperature until the water boils and kills the frog. That's what inflation does. So if you're making that choice, I'm going to keep some money in cash or I'm going to invest it, you should keep a certain amount of money in cash. You absolutely should. That's the 3 bank account system to manage as the operating system for your cash flow and your foundation, your present financial position, okay? But dollars that you choose to say, nope, I should invest those for the long term, your objective is to beat inflation. Your objective is to outpace and beat inflation. And the stock market, of all major choices on what else you could do with that money other than cash, the stock market, well, really even cash, right? The stock market has been the best broad investment, broad choice that you can do with that money to beat inflation. Now, you step away from keeping that money in cash and you invest it, and yes, you open yourself up to not the chance that your investments are going to go down or that you're going to experience a crash or you're going to see some really challenging months, quarters, years, couple of years in the market. You don't expose yourself to that chance. You expose yourself to that happening. That's what happens as a long-term investor. But the thing that helps you stay steadfast, focus on that stable horizon instead of looking down at sort of the volatility, is that over the long term, stocks have been the best place to beat inflation over time, as even the past 20 years, which we've seen the most inflation in 40 years. We've seen the worst stock market since the Great Depression. We've seen the first pandemic and economic shutdown, really, first pandemic in 100 years. Still, even this time frame, it's not even close what your choice is. So, sometimes there are times we all need this little motivation, okay? This encouragement to, again, lift our eyes off of that volatility, that shakiness that's happening each and every day, and look on at that horizon. If working with your certified financial planner, if in doing that, it's prudent for you to save a certain amount of your dollars for the long term, and it's prudent to invest those in a mix of U.S. and international stocks, bonds, and real estate, stay steadfast. There will be times of volatility, but that volatility, opening yourself up and exposing yourself to that volatility, will also reap the reward of handedly over time outpacing and beating inflation. Work with your CFP on that. Make sure you've got the right risk level, you're taking the right strategies, and you're funding your accounts the right amount so that you can achieve your long-term financial goals. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.